Hi everyone, welcome to another 20-minute power play. I'm Sam, head analyst at Crypto Consulting Institute. As always, super excited to bring you these sessions, give you a bit of a snapshot of what we cover with our clients on a weekly and daily basis. We look at everything from the charts to what's happening in the markets, to the macro, to the micro, and also how to assess risk. We've only got 20 minutes and I want to crack straight in and just show you as much as possible in the time that we have allotted. So I want to bring you first of all to the Crypto Fear and Greed Index, and we're going to look at it pretty much every session, I'd say. I'd probably say it every time as well, but it is just so important just to gauge where the market is in terms of sentiment. Now, we look at things like technicals, fundamentals, and sentiment. You pair those three up, you have a very powerful confluence of indicators on where the market sits, and you can make some very informed decisions by looking at those three things. So first of all, the Fear and Greed Index is right here. It's in a dial. Now, for the past, let's say 2 months, this has been in a consolidation pattern in a very low ebb. So it was at record levels. And if we just zoom down to the chart of the Crypto Fear and Greed Index over time, we have really never seen this type of consolidation in the lower parts of sentiment, the sentiment bars. So we've had, days where we've had 10, 12, 9 single digits constantly being low. There was a lot of panic, a lot of fear in the markets, and you can see this concentration here. Look, we've been watching this for multiple cycles, and I can tell you more often than not, when the sentiment is that bad, that low, when panic has stepped in, when you look at the broader macro picture and the market cycle where we are, mid bull market, we're having a very, very big and bad retracement. You look at some of those other indicators and suddenly you see that pretty quickly this can turn around, and that can be led by sentiment. Once sentiment is so low, there is the play to look at the contrarian move there. So again, it was so heavily concentrated on the lower ebb that it has to have a relief spring eventually, and it did. So instead of single digits, we're now at 42. We had a lot of speculators and short-term investors flush from the market, and since then it has just been a slow grind higher. And then we've had a supply shock as well, which has boosted us up from potentially the low of the market, which was $30,000. We can have a look at that in a sec. But if we look at now, it's 42. Yesterday was 48. Last week was 50. And last month it was 29. So you can see we've had a fairly decent bump from the month gone previous. So yes, very, very interesting to look at the fear and greed. Sentiment in this market is, I don't want to say it's everything, but it is a huge component of what happens in crypto, simply because this is such an immature and young market. You have to look at what the investors are thinking. And when you're looking at candlesticks on a chart, such as say this one here on the Bitcoin chart, when you're looking at all these greens and red, the candlesticks, it's all investor psychology. It's all the markets moving up and down, people buying and selling at agreed prices. So at the end of the day, that's all it is. It's all psychology. So if we're looking here at the Bitcoin chart, just have a recap of what's happened over the last 4 weeks. So we had that grinding ever lower. It was like a bouncing ball that just kept bouncing with less and less momentum until it finally had that capitulation below 30,000 again. So we've had 3 of those types of capitulations. We had one here in middle of May, we had one here middle of June, and finally we had one here in the middle of July. So it's a long time between drinks there, a month. So we've probably covered this each time, but to have this drop below again and to be completely pushed up like that, you could see that the bears were weakening as this bull was slowly moving down. The bears were getting softer and softer in their selling, and bulls were gaining a little bit of momentum. And you can see that on the momentum indicators such as the RSI below. You can see as this is falling down, you can see on the RSI, the momentum was actually increasing for the bulls. The bears were losing steam. So bears are sellers. They were losing steam each time they were selling. It was weakening and weakening and weakening. And we're at such a key support here at 30,000. We've never seen the market cycle. So in a bull market, we've never seen the market close beneath the previous high in a bull market. So if you look back to 2017 and 18, the high was roughly around $20,000. Now there's been a lot of calls for this to go lower. If 30,000 broke, there's been calls for mid, 20,000, low 20,000, even lower than 20,000. And eventually the market does find a floor. And we've seen a bit of a supply shock, which we'll go over in a sec, where the demand simply outstrips the supply. And then we've had a big bounce. And if we look here from that 30,000 area here, we had what's called a short squeeze. So there was a lot of derivatives trading, so longs and shorts. If you've ever dabbled in leverage trading, you know what I'm talking about there. But we had a massive squeeze. So the market was over leveraged short. So the consensus trade was that the market was going to go further south, going into the the 20,000s, but it didn't happen. There were some market makers that came in, saw an opportunity, and the market started to move higher. And that liquidated a lot of those people that were banking on it going lower. And it creates this momentum wave. And you can see here the kind of wave that we generated. It was huge. It was about a $10,000 move over the space of 10 days. Have a look there. It was 43% move, over 12,000 US dollars. Just incredible there. And we ripped through some key support levels that, you may have suspected that we're probably going to run into and fall back down, but it just didn't happen. It was a lot of bears in disbelief, sort of around this bottom area. And this tends to lead me to think that we are close to a bottom here in the market in this part of the cycle. So you can see here, we've cleared this previous high, but we want to get back above here. We want to confirm that this is in fact now an uptrending market in a bull market. Otherwise, we are still range bound. You can see this range that we have been respecting for a very, very long time, we're back in it. So 40,000 and 30,000. Until this range breaks to the upside or to the downside, this is what we're looking at. We're just looking at this range and we're just waiting for more data to make a more informed decision. Now, this is on the daily chart. If you go to the weekly chart, and if you go to the monthly chart, things are looking a lot better in terms of where the market sits for the next, say, for the next few months, the midterm and the longer term. But for right now, we're just looking at the daily, and this is what I wanted to show you today, simply because this is just such an extreme move for the market off a low area. And it does bring me back to what we discussed last time, is the psychology of markets, where people are willing to throw money at the cryptocurrency market when it's moving up at a peak state, so 60, 65,000, but nobody wanted to buy around $30,000. Now, our clients, being informed, looking at the data, saw the opportunities that were presenting at these low levels, pretty much a 60% haircut from the highs. And if you're looking at the longer term trend, that is a perfect opportunity point. Now, the moment of maximum opportunity, financial opportunity in these markets, is when it's going down or going sideways. You never want to buy in this market when it's moving higher, unless you have data or a strategy to suggest that it's going to be a fleeting or step-by-step move higher. So that is something we cover as well. But looking at this, there's a lot of people that are very, very sad and we're waiting for this to go lower. However, the market rarely does what you think it will do. So you've got to have a confluence of indicators telling you what's going on. And you could see on chain that this move was starting, it was happening, and it was very, very possible. I'll just quickly touch on something here. It's Bitcoin dominance. So this shows you the capital inside the market. So the entire cryptocurrency market, you've got Bitcoin, you've got altcoins. It shows you at what stage Bitcoin is maintaining the dominance of all that capital, and at what stage the altcoins are maintaining dominance or gaining dominance from Bitcoin. So we can see here that we're in a phase which is, it's pointing to the altcoins could actually have a bit of a run here. So we're seeing this line here. If we run into it and find resistance and we move back down this way, then altcoins will gain capital and liquidity from Bitcoin and start to go into a bit of a relief rally, a bit of a spring. And we're seeing down here in this box zone here, this is where we had that 2017, 2018 ICO mania. So very, very important to look at these historical events on your charts. It's a bit of a guidepost to what could happen. So if we start to get down into these areas, that means we're approaching those same levels of altcoin dominance that we had back then, which may actually signal that altcoins are in a phase where we could see a reversal back towards Bitcoin, because this was the top for altcoins. So very, very interesting to look at these kind of charts. Okay, now just quickly, I want to show you a very broad chart of Bitcoin 2017 on the weekly. Now, we've had, again, a 60% drawdown, and we've had a $10,000 recovery from that $30,000 low. But just showing you as well, looking back on history, these things happened a lot in bull markets before we had a reversal. So here we had a 37% retracement. Here we had a 40% retracement, give or take. So on the way up, before we found our new peak, we had troughs in price where sentiment bottomed. A lot of new speculators or new investors in the market capitulated. They sold everything. They just couldn't deal with this anymore, the volatility. But if you're a longer term investor and have a strategy, I mean, these markets, the volatility cuts both ways. Yes, you can get very afraid and you can just want to sell everything and get out of these markets as quickly as possible, seeing portfolio lose 20, 30, 50%. But if you have a longer term view, I mean, the volatility in these markets is what makes these gains so attractive to new investors, and what makes them possible as well. If we didn't have this extreme swings in volatility, you wouldn't be able to become a millionaire through one cycle, or maybe even less time if you have the right approach and process. Okay, just moving on to Bitcoin and liquid supply. So this is a chart from Glassnode. It just shows you here the yellow line. So liquid supply, this is Bitcoin's actually moving off the market. So liquid supply is moving around exchanges, it's in wallets, it's being transacted quite often. We're seeing, as price was dropping, more and more Bitcoins were moving out of that liquid circulation and moving into cold storage or into wallets that just don't transact or move very often. So we think that that is Bitcoin that will not come back onto the market for a very, very long time. And that is a very, very interesting metric. And this helped build that momentum for that short squeeze and that supply shock around 30,000. It's what made us so confident looking at the on-chain data that we were going to see a reversal either at 30,000, 29,000, 28,000, somewhere along there. Bitcoin was due for a bounce if everything held true. So on-chain is very, very important to know. And you can see the liquid supply go up as we had that big bounce. But you can see the clear divergence from the two charts. And now we're having a bit of a closing of the gap between the fundamentals underneath the market and the price of Bitcoin. So this is really, really interesting to know. Here's another great chart, the buying habits of shrimp. So these are investors in the market who have under 1 Bitcoin currently. So they have been buying and fueling this recovery. They've been buying as the market's been falling. There's a lot of investors around the world that are just buying Bitcoin no matter what. Doesn't matter the price. They're just stacking each week. They're putting away a percentage of their income into Bitcoin each time, no matter what, buying, dollar cost averaging in. And we're seeing this starting to create a bit of a wave, a bit of a price floor like it has done previously, but we have never seen this amount of continued small buying by AKA shrimps. And Willie Wu, an on-chain analyst here, he really sums it up really, really well. He also shows that whales are buying this rally as well. And we've been seeing that. You've probably heard me in the last few videos that as we've been falling, the smart money or large wallets have been accumulating all the short-term speculators selling their stacks. So people have been selling at a massive loss that are maybe late to the market in a peak state. They've been selling on the way down, frustrated, upset. Meanwhile, there's these big whales, so big wallets or big investors that are just hoovering up the supply as they're selling, and they're acquiring more and more. But overall, the market is diversifying into these small wallets as well, which is just great. We want to see that because it means the market's growing. Something we need to be aware of too, and it's been festering for a little while over the past few months. Rumors, talk from the US government about their crackdown on crypto or stable coins. Now, it came to a bit of a head last night when the head of the SEC, so the Securities and Exchange Commission in the US, came out that crypto is the Wild West and needs stronger investor protection. And we've been hearing this for a while, and you need to be so across the risks of this market. And if you're not, you can have the rug pulled out from you and wonder why, and you'll be completely at a loss to what's happened. So this is something you need to be across, and we're going to see a lot more regulation come into the crypto market because, like they say, it is a little bit of the Wild West currently, and there's a lot of people losing a lot of money, and the US obviously wants their cut. So the government wants to come in and make sure that investors getting into this market, investing into meme coins and things like losing, 60, 80, 90% of their net worth overnight doesn't happen all the time, and they can't get hold of, ridiculous leverage, to say 20, 50, 100x leverage that can, put people in a serious hole. So you need to watch this, and they're coming hard for stable coins. So things like Tether USDC, they're looking to regulate these heavily, and there is, there's been for a while a bit of suspicion that Tether isn't fully backed by collateral. So a stable coin is backed 1-to-1 by the US dollar, but the company behind these stable coins needs to have all the US dollars in reserve to back each new token that's released as a stable coin. So This is really important to know, and you have to know the risks of holding stablecoins. A lot of people buy stablecoins thinking it's safe, it's pegged to the US dollar. Then they'll go into something like a DeFi or a yield farm, earn some really attractive returns, 5, 10, +%. But you need to understand the reason why you are earning those kind of yields is because there is so much risk attached. So you need to be across it, because overnight, say Tether could implode and you might lose all your holdings that are stacked in, some DeFi account or a CeFi account, something like a BlockFi or, other types of centralized finance accounts. So I did a write-up here for our advanced clients in the mastermind group. I said that Gary Gensler, so the head of the SEC, is dropping bombs in his latest speech. Appears he's going after DeFi and stablecoins in a big way. They may pose a threat to national security, is said. So he said that in his speech. So he's clearly being very, very hostile and strategic with his wording. Now, this is a man that actually taught about blockchain and Bitcoin at MIT, so he understands what he's talking about. But this isn't a surprise. The government or regulators were always going to come for cryptocurrency at some point, but we just need to hope and make sure that when we're engaging with this kind of dialogue, that they're not going too hard to stifle innovation. So I've just gone in here to say the water continues to get muddier, but once this plays out, I'd argue it is bullish for investors of sound projects, and as long as the regulatory measures aren't outrageous, will greenlight massive capital inflows for traditional markets. He's also open to a Bitcoin ETF in the US. This has been something that a lot of investors have been hanging their hats on, hoping that's happening. I don't see it happening this year, just with the communication that's coming out. There's issues with the classification. There's also issues with the optics of it. So, ETFs have been being rolled out in Canada, in Europe, and elsewhere, but just not yet in the US. But you need to be aware of the risks, of the regulatory risks of investing, not only in some of the lower risk cryptocurrencies, and top market cap, but a lot of the lower market cap cryptos, a lot of the altcoins, the small altcoins that aren't audited, don't have a centralized authority. There's not a lot of checks and balances. These are the kind of projects you do have to be aware of, and factor that in your risk matrix when you are investing, that suddenly overnight they could be slapped with being a security from the SEC in the US, and suddenly they won't be able to be bought in the US, or it could just unravel the entire project. So there are risks, and a lot of things will shake from the tree, but this space is so young and dynamic, we're just going to have to wait to see how this plays out. Now, this is Gary Gensler. Again, he's the head of the SEC. I won't play it because we're probably running a bit behind time, but he says Nakamoto's innovation is real. Again, he taught at MIT about Bitcoin. He understands it. His speech today was very, very positive towards Bitcoin. So I can't understate that. And he says the innovation is real. So Satoshi Nakamoto was the inventor of Bitcoin. It is a pseudonym. No one knows who actually invented Bitcoin. But he believes Bitcoin's here to stay, and they're going to make it as easy as possible for investors to safely invest into the asset. It is debatable why they won't do an ETF, because you could argue that by allowing an ETF, that will provide that protection that investors actually want for Bitcoin ETF. So there's a lot to play out in this space, but Gary Gensler is no stranger to cryptocurrency, and he has spoken a lot about Bitcoin and why he is a believer in Bitcoin, the technology and blockchain. But he does have to be neutral in this respect. He does answer to his masters in the US government. So there's a lot of pressure right now, but there is a lot of entrenchment in the US government of senators and Congress, men and women that are actually Bitcoin holders, and they're on finance committees. They are in the circles of power, and they are lobbying hard to make sure that Bitcoin and crypto isn't regulated into oblivion. So just something to keep an eye on there. Okay, this was a really good bit of news of a company, a very well-known company that is actually making a lot of money from Bitcoin. And I foresee this is just going to get more popular, and you're going to see this a lot more from remittance companies and different companies on the whole that are going to be incorporating Bitcoin into their business model in some respect. So Square, you've probably all heard of Square Pay. So Square reports its Cash App yearly revenue from Bitcoin services rose 200% to 2.72 billion from 875 million. Now that is an incredible rise for traditional finance. This will make a lot of people in the remittance industry certainly look up and take notice. So Bitcoin gross profit jumped to $55 million from 17 million. So Square just released their shareholder letter and their earnings. So This is all public. You can see it if you want to chase it down as well. Now, finally, I'll just leave us on what's happening in Nigeria, because it is very profound. So Alex Gladstein wrote here, terrific overview from the author of this article from The Guardian on why millions of Nigerians are turning to Bitcoin to do business abroad, fight for their human rights, escape inflation, make cross-border payments, and overcome financial barriers in a way that the government can't stop. And you see here the title of the article. It's very, very eye-catching, out of control and rising, why Bitcoin has Nigeria's government in a panic. And it is so true, because the Nigerian government and the reserve board of their currency in Nigeria actually banned Bitcoin. They could see what was happening. They banned it, and usage and remittances in Bitcoin actually went up. So in this respect, a ban on Bitcoin did not work. Now, you could argue that it might be more effective in a G8 nation or a larger Western nation, but so far the ban has actually gone backwards. They have reneged on that. They're actually trying to be more progressive and embrace it a bit more, because their population is just using it. Their currency's in the toilet. They need something to live on, and Bitcoin, being this decentralized ledger that you can get on your smartphone, pay anyone globally, get access to US dollars. I mean, it is, the opportunities are endless using Bitcoin and other cryptos, and it is fairly obvious here as well. So I'll just read here, according to Bitcoin trading platform Paxful, Nigeria is now second only to the US for Bitcoin trading. The dollar volume of crypto received by users in Nigeria in May was 2.4 billion, up from 684 million last December, according to blockchain research firm Chain Analysis. And the true scale of crypto flows through Africa's largest economy is likely to be much larger, with many trades untraceable by analysts. So you see the growth there, you see the trend of what's happening here, you're seeing the trend of what's happening in countries like El Salvador, in Tonga, that have been downtrodden with inflation from their central banks. So human error, greed, government mismanagement, it's all coming to the fore. Technology is starting to give people an optionality, a way out from the current system, and it's just beautiful to see. So you can see the trend here. It's really, really interesting. And I'll just read this here as well. Nigeria is one of the youngest populations in the world and is ripe for digital finance, with many people looking for ways to escape widespread poverty, pyramid schemes, and proliferating. Trading in foreign currencies is an everyday activity for many. Remittances into Nigeria from those working abroad, which were worth more than $17 billion in 2020, have played a role, as of the way digital currency provide insurance against exchange rate fluctuations. So the value of Nigerian naira has plummeted almost 30% against the dollar. So this is really, really important. This is where crypto and Bitcoin can really make a big dent, and that is through remittances. So, but sending currencies between countries, we all know, is quite expensive. And there's a lot of people that work in, let's say, for instance, Nigeria, El Salvador, Tonga, actually work abroad for a living and send their money back to their family in their home country. Now, the problem is there is a monopoly remittance company standing in the middle of that transfer, and they take a seriously bad or criminal cut, let's say. It's almost 30%. In some cases, it's higher. So you imagine working hand to mouth, you're sending back what you can to your family back home, and some company, just for the the position that they're in, are able to take 30% of what you're sending back. I mean, it doesn't seem fair, does it? With Bitcoin or crypto, you could send that almost instantaneously across borders, and they can receive the full amount. That is super exciting. That would mean 30% of that person's paycheck is suddenly going back to their family. They can save more, they can add more to the economy, and the GDP of the country will grow because of it. It is a super lucrative position, and it's what a lot of countries, a lot of leaders in countries are looking to help their people through by getting on top of these remittance companies. And if they don't, the people will do it anyway. So they need to progress, and I think that's really, really exciting. And we could talk about El Salvador and Tonga more, including Nigeria, but Nigeria being the second most traded, Bitcoin being the second most traded region in Nigeria is just absolutely wild in the world. So really, really exciting stuff there, guys. I probably have gone over my 20 minutes again, but so much has happened. It is just such an exciting time to be in crypto and be an investor in this space. It is just super, super exciting. If you'd like to talk more, of course, get in touch with the team and we'd be happy to chat. I hope you found this video valuable, and we'll see you next time. Thanks, guys. Bye.